Monday, December 18th, 2:13 p.m. New York time. Good afternoon. This is a review of my scalping I did today. Yep, I scalped Forex. I scalped the euro. Traded bullish. It's a good trade. So looking here, we're looking at 4 grids, each of them on a daily time frame. This is my broad market profile look at before I start trading to get a perspective where we are from the prior day. So the top left, S&P 500 futures. Here in the top left, second from the left, 10-year yields. And the third from the left here, US dollar. And the far right, the euro. So overnight, I saw all of these prior to now, this morning when I was trading. They were all yellow candles, the candles to the far right on the daily charts. Well, now you can see here the S&P 500 futures broke above the high yesterday and also made a new high for the year. The 10-year yield actually broke below the low of the prior day and back inside the range. US dollar still inside the range. And look at this. Look at these huge trading ranges the prior 3 days on the US dollar. And look how small it is now, this little yellow candle. The euro, same thing, inside candle. Small little trading range. Very interesting. Yep. Very interesting. I say this again because we had the yield go lower. You would think the dollar would go lower. Typically, the yield and dollar sometimes have a correlation. And definitely the dollar and the euro here have an inverse. So money's flowing. The news is very light, let's say, on these. So when I saw this, I was leaning again, more bullish bias on the euro. Let's go into the chart. We'll look here. This is my top down. I start in the morning. Go here on the 4-hour charts, update my charts. Let's go to the 1 hour. So here, what I do is label the overnight low. That's this yellow dotted line, says overnight low. And I label the overnight high, which was here during the London session. Zoom out some more. I also label the prior day's high, which was here, this yellow solid line, and the prior day's low, yellow solid line, okay? And then as well, I make a white horizontal line for the opening overnight, right there. You see that? As well, the 15-minute chart, I label the Asian session, the London session. As you can see here, the Asian session was trending. They were marking it up. After the Asian session, they continue marking it up into the London session, which was distribution, mark down, accumulation, mark up. I'm looking at all this as I'm doing my charts. Then, before I get ready to trade, I also label the important key levels on the 4 hour. So I noticed that 4-hour candle was a huge trading range. Label that high one, purple line. And there were no big ones that were very significant down here. So then I go to the 1 hour, zoom in here. On the 1 hour, see these purple dotted lines. I was labeling those 1 hour lows, potential areas to be tested, as well as the high. Let me zoom in here so you can see some more. So obviously you can see this one down here has already been tested. This 1 hour, this again, 1 hour candle, purple line was the 1 hour low, and this purple line was the 1 hour high. Well, obviously I stopped trading here, that green vertical line is. So these were no longer important to me. Yep. You see pretty much huge consolidation here. Now let's take it to my trading area. Take it to the 1 hour, sorry, to the 1 minute, because I was trading on 1 minute. And again, this purple dotted line would be the 1 hour highs and lows, the yellow overnight high, the dotted line. Well, when I came here seeing this, I'm seeing these rejections up here. So when these rejections right here, again, this was that 1 hour high, it tested it right here. So it was no longer valid. Take it off. And then after that, look at that. Again, this high was higher high there. And then we went up and tested the overnight high up there. Nice. So that line was not valid anymore because I already tested it. Just close it or change the color. So then, if you notice, we're making higher highs. And this low here, yeah, we broke below it here, but we didn't close below it. So I'm thinking, okay, that was a fake out. Almost like a bullish pin, well, let's say bullish pin bar here and here. Yeah, buyers stepping in, defending it. So this next candle, when it took out that high, I bought it. I went long, 0937 a.m. in long. And then again, came back down on weakness. I liked it again. I bought again. More positions, 0945 a.m. And then I see again, we're doing accumulation here. Big wick down there, rejection went up. Bought it again, 0947. So I was in long several times. I got them with several contracts. And notice again, this was a buying opportunity because you notice all this was a huge consolidation. Going forward, one of my targets was up here. It's forward. You can see where I got out. So right up here, this was a swing high, and I retested it right here, this green candle. I didn't close it right there because I was thinking, okay, we're going to go a little bit higher. Where I'm thinking maybe we'll go to. Let me show you on the 1 hour. So on the 1 hour, about a little bit more. I was thinking possibility we might test this midpoint. This midpoint was off the 4 hour. See this 4 hour candle? Midpoint right there? I was hoping to test it. And that was one of my upside targets. Let's go back to the 1 minute. So once that green candle made a higher high, higher low, and closed, I moved up my stop. Moved up to my stop to be in all gains. Not profits because I didn't close my trade yet, but all my gains I was in. So if the price spiked down, I would get stopped out, but for gains, for profits, because I moved up my stop. And then the next candle, red, higher high, higher low, rejection. All right, I'm concerned. So I move up my stop a little bit more, willing to get stopped out for profits. And that's what happened. Stopped out right there. I'm happy. Won the trade, didn't lose, and didn't get out at the high. Pretty darn close. So again, you can see all this was accumulation at that time. Accumulation, markup, and look what happened after I got out. Marked down. A lot of markdown. So thank goodness, good money management. I moved up my stops and got out. Again, that was around, got out at 10:02 a.m. Again, there wasn't much economic news today for the United States. Don't need to sit here all day and trade, but got out. Worked out fine. So let me show you this on the 5 minutes. So you can see something here on the 5 minutes. Zoom in some more. There we go. Or no, was it the 15 minute? Yeah, the 5 minutes. Sorry. Go back here on the 5 minutes. So this was the London session. Huge concern here. Okay. Very tight trading range. Very tight trading range. Let's zoom in some more. Tight trading range. So on the 5 minute, the point is I'm trying to show you on the 5 minutes, I prefer the 1 minute and scalping. Scalping, that's the point. I'm not looking to hold this overnights. I'm not looking to hold morning and afternoon session. I'm looking to get in and out. Just do large position sizes. And good money management. Let's go back to the 1 minute. Zoom out so you can see how things go. This is the 1 minute chart. Again, this was all markup. Asian session. During the London session, it was distribution, markdown, accumulation, markup. So I got out in the markup phase and distribution phase, the top. Distribution means selling. Yep. Again, because I was on the 1 minute. Thank goodness I got in and out very close to the tops and lows. Yep. And look at this. The liquidity certainly is going down. If you like this content and want to get it real time, I recommend you click the link below to join my Patreon. Thank you as always for spending just a little bit of your time with me. That's it for this video. Thanks for watching.